Good morning, it's Jonathan Bauer with the morning debrief. It's for Friday, June the 17th. Current time is 7:43. Quite an interesting night. I guess most nights these nights are quite interesting, particularly on the equity market. Very nervous to begin with, but the back of some relatively encouraging economic data, we saw a little bit of a lift towards the close, which put the Dow back in the black. We'll have to look at some of the charts. Also, commodity markets were relatively stable. US dollar relatively strong as well. Dollar index hitting that 75, 76 level and coming off. Tough resistance there for it. But I guess it's all really economic number driven at the moment, and so the market's going to sway either way. Had quite large movements in the grains too last night, and that was purely on the back of a repeal. That we think repeal in the corn or the ethanol tax, ethanol subsidy, which the Senate voted to put back in play, citing something about, we've got to cut the deficit. So that's some of the senators actually said. Reading between the lines, I think it's more of a knee-jerk reaction. Corn coming back at any level only creates the incentive to have more demand. But in the flavour with oil coming back as well, then it does create an argument for this correction to continue in some of the softs. But before we get into some of those markets, let's have a usual snapshot around the equity markets around the world, just to see how everything still concerns in Greece and Europe. That it still remains a bit of an issue for a lot of investors, and probably expect that to continue until we come up with some plan of attack that actually works. And I guess Dow was up 64 points, S&P was up 2, Nasdaq was down 7. Looking further afield, the top 50 was down 0.88 in Europe, FTSE down 43, CAC down 14, DAX down at 4.88. So still quite nervous there. The insurance for Greek sovereign debt reached a record high last night, and so there's still massive concerns there about what's happening. Let's just have a quick look at the euro, and just so we get a bit of a lead there of what is occurring. 142.11, and as you can see, a little bit of a recovery there in the currency after seeing that quite dramatic decline over the last couple of days. And there it is there, as you can see, up, down, coming back, support 140. Still remains relatively weak, momentum weak, so we expect that trend to stay with us for a little while. The dollar obviously remains relatively strong. There's the dollar index, 75.86, as you can see. A tough resistance here. It might take a little bit to break through it, but once we get through that 76.30, we do have a low in place for that dollar. Probably see that risk aversion trade to the dollar continue, hence our long positions in the currencies. We're certainly long US dollars against the Aussie there, and that seems to be marking time there, although holding up quite nicely. And dollar yen, we're certainly long dollars against the yen, still on that massive low there that we see, and probably expectations there for it to continue to trade higher. Moving across to some of the commodities, and obviously a bit of a field here for the crude price. Right down, 95 has been that key we've talked about for quite some time. It's still stacking there. Last night's trading was relatively subdued in a very tight range. That was relatively positive. Obviously the bulls and bears are at bay here, and 95 is that bifurcation point for the market to decide whether or not she wants to go higher or lower. The personal preference is lower, and that's the way our book is positioned at the moment, and need to see that break to that 94, 20 to 30 level. In yesterday's report we said, well look, if the market can have a daily close below this level, then we're confident about the momentum will remain with the bears. But if in fact we see a little bit of a turnaround, well, we're still here. So we can't really conclude whether or not that trend lower for crude is with us. So we've just got to wait for another day's trading. Okay, having a look at copper, 411. I know LME was relatively weak, but these sorts of moves, although we've got a negative bias towards copper, these sorts of formations at the moment, and if this area here holds around at 402 or 400, these can be quite positive. So this is, if anything, a breach or a consolidation of the move from here, from 420 down to here. But let's see. I mean, the fundamental outlook doesn't look all that good, but technically perhaps quite strong at the moment. So just stay close to that one. And I guess looking at some of the other commodities, corn and wheat and soya all under pressure. We've had small positions in all of those, and obviously the repeal of the subsidies there is causing a bit of concern. What that does to me, and it does put a bit of a high in place, expectations for this commodity now are for lower, and something I didn't pick up, but there's some divergence there, so that suggests that this play can come all the way back down to 650. So if you're prepared to tough it out, I think it'd be okay. But at the moment, I think you're going to find weak prices across the board, particularly until we get some weather issues there. As you can see, wheat exactly the same there, and soybeans. But soybeans seems to be holding up a little bit better than the others, so I'm a little bit more optimistic on the beans. Okay, let's have a look at a couple of other things. Of note, I think gold, 1432 3/4, marking time, I think that looks okay, and I think with any form of inflationary pressures, I still support that. Looking for silver there, silver marking time as well, but I get a hunker that I actually start to like silver down here. I have mentioned it quite a few times, so I think silver is a better placed trade over gold at the moment. And I guess looking at the local market, ouch, I guess is the status quo there at the moment. I think we're all suffering a little bit. I don't like this fall down here, this break below this trend one thing. Momentum indicator suggesting a low, but you don't trust those momentum indicators when momentum is weak. Let's just see, it's been a very tough couple of years for trading the equity markets. We are falling below that average price here for some time, so expectations are that it'll come back. I think I'd prefer to stay on the sideline till about that 4,200 level. So that to me is probably where you represent the cheapest and most best opportunity to get long. Okay, let's have a look at the economic calendar for today. There we go, just coming up. Economic calendar. There we go. Not too much. I guess if you go through the data we had last night first, building permits in the state up 6.612, relatively encouraging. Initial jobless claims not as large as expected, but still 414,000. Housing starts a little bit better than expected, a little bit encouraging there, so quite good there. Current account 119.3 billion. That's a deficit. Market was expecting a much larger number. So as you can see, some of that data I think people were quite comfortable about. Today we see a little bit of data in Japan, a couple of trade balances around Europe, Eurozone trade balances, and confidence indicators and leading indicators out of the States. Once again, we've got to look for data that is encouraging, creates optimism, which will obviously help the Fed in terms of trying to get its resolve as to whether or not we have QE3 or not. We're still on the camp that we don't expect that QE3 to come at the moment, and I think Bernanke is of the opinion that the economy should try and work out on its own whether we're his support. And the other thing is, can the states actually afford a QE3? So let's see how. That's about it from me, though. So I hope everyone has a great day and a great weekend. It's good to see the sun out in Sydney. We haven't seen it for about the last week. And happy training, and just protect your cash at the moment. Bye for now.